if you are a risk taker, which I am, you want to have more mining stocks because these stocks, again, are so undervalued relative to the current price of gold because investors are waiting for gold prices to fall. Plus, also, the cost of mining has gone up a lot. And every time one of these mining companies comes out and they miss their earnings because their costs are up, the stocks get absolutely killed, right? Any bad news and a stock gets decimated because that's how little conviction the gold stock investors have. They're so scared. And even when, you beat earnings, the stocks go up, but not nearly as much as they should. But I think what's going to happen when you get a huge move up in the price of gold, I don't care if the costs go up. It's not going to matter because they're not going to go up anywhere near as much as the price of the metal because there's so much pent up upside that we have. I think, one of these weeks we could see gold up $500 to $1,000 in a week, right? I want to make sure that all of my listeners have all the gold they need and all the silver they need before we have that week, right? And no point waiting.
In this video, Peter Schiff delivers a compelling analysis of why gold could potentially surge by $500,000, making now the ideal time for savvy investors to take action. He points out that while gold prices have already risen eightfold since 2000, many mining stocks remain severely undervalued, some even lower than they were in 2011 when gold peaked at $1,900. Schiff argues that the market is overlooking these opportunities, with investors scared off by rising mining costs and missed earnings reports, leading to historically low stock prices. But here's the catch. When gold makes its next big move, these mining stocks could explode in value, offering massive gains. Schiff is adamant that this is the moment to buy, before the mainstream media and big investors jump on board, driving prices sky high.
I'm sure I'll get new customers then, right? When gold really starts to move, people who haven't been following me, who've never bought any, yeah, they'll eventually show up and start buying. But I want all the people who are listening to me now to already own gold. Don't wait or silver and buy it higher. But getting back to the mining stocks, this is where the big gains are going to be. Because I talked about how the price of gold is up eightfold since the year 2000. There are many gold stocks that are lower than they were 24 years ago. I mean, I own some of those. Now, I also own some that are way up, but as a group, they're not up that much. I mean, most of them are above where they were in the year 2000, but the majority are below where they were in the year 2011 when gold topped out at 1900. Most gold mining stocks are well below where they were in 2011. So these stocks are very, very cheap. They're not going to stay cheap forever, right? And while they are, you got to take advantage of it by buying them. Now, one way you could do it, if you're not sure, which ones to buy, is to buy a fund. And rather than just buying an index, why not buy my fund that is managed by Adrian Day? I think Adrian is a smart guy. In fact, he knows a lot more about mining stocks than I do. That's why I hired him to manage my fund. I didn't try to manage it myself. I wanted an expert who's been doing it for 40 years or 50 years, however long Adrian's been managing gold. He's forgotten more about gold mining stocks than most of these analysts know. But I think he's built a fantastic portfolio, especially with some of the junior companies that nobody would know about. I think that's where the biggest gains are going to come from. So anybody can just buy my gold fund. In fact, there's a no load version. So if you're not, working with one of my advisors, if you're, at Schwab or Fidelity or one of the discount brokers, no point in paying the load. I don't even get it. You're just paying it to Schwab, and so they don't need it. And you want to get your positions in these mining stocks as soon as possible before the world wakes up and realizes how cheap they are. Nobody is paying attention. Again, they're not talking about it on CNBC because the average investor couldn't care less about these stocks. And so CNBC doesn't even bother to cover it. Why are they talking about Bitcoin all the time? Well, because that's what their listeners care about. That's all their advertisers are advertising Bitcoin or other cryptos. Nobody is talking about gold, right? Well, that's when you want to buy it, when no one's talking about it, right? By the time everybody is talking about it, the price is going to be much, much higher. And by the time your typical, portfolio manager, whether it's a, mutual fund or a hedge fund or some of these pension plans or endowments, by the time they start buying these gold stocks, it's going to be because they are way, way up. That's what's going to put these stocks on their radar, right? The 5% move that they had this week, that's nothing. I mean, NVIDIA was up 18% or something on the week. So who cares about these gold stocks? They're going to have to be up a lot more. But when these things are tripled, quadrupled, or more in a short period of time, yeah, they'll finally get on the radar of the mainstream, right? But I don't want my audience to wait until then. I want them to be fully invested by the time that happens.
In this segment, Peter Schiff offers a compelling analysis on how a potential Kamala Harris presidency could dramatically impact the economy, forecasting that her proposed policies would be highly inflationary, leading to a significant surge in gold prices. He also underscores a critical shift in the market. The US dollar just closed at a 5-month low, right as gold begins to break out. This, Schiff argues, is a clear sign that the dollar's decline will only add more upward pressure on gold. Drawing on insights from former Fed Chair Alan Greenspan, who famously used gold as a key indicator of monetary policy, Schiff points out that today's record-high gold prices are flashing a warning sign, one that Jerome Powell seems to be ignoring as he prepares to cut rates in September. This could be a monumental mistake, leading to even higher gold prices.
Now, one of the things that would be particularly bullish for the price of gold, and I'm not rooting for this, I'm just saying that it would be very bullish, would be if Kamala Harris were to be the next president. Because I happened to listen to her economic speech today, if you want to call it economics, in quotes. And everything that she is proposing is highly inflationary. Oh, and by the way, before I even mention that, the US dollar index tanked on the day and it closed at a new 5-month low. And, this also is a big indicator because you have the dollar going down, potentially breaking down, just as gold is breaking out. And I think once the dollar really starts to fall, which it will, it's going to put even more upward pressure on the price of gold. Oh, and by the way, one more thing I wanted to point out before I get to Kamala Harris. Jerome Powell claims that the Fed is data dependent, that they're looking at the economic data to decide whether or not they should cut rates. And I've already told you they've decided they're cutting rates in September, right? They're going to do it. The only question is, do they do 50? Do they do 25? Do they do 75? They're doing something because the market now expects it. And that's why we got a big rally this week, is because, they're all convinced now that we're going to get this rate cut. But what Powell's been saying all along is the reason he's waiting until September is because he's looking at the data and he wants to make sure that the data supports low inflation and a return to 2%. And he claims that his monetary policy is tight, and it's been tight, and he doesn't need it to be as tight because of the data. Well, once upon a time, Alan Greenspan was the chairman of the Federal Reserve. So he had the same job that Powell has now. And what did Alan Greenspan say was his favorite indicator of whether or not he was too easy or too loose in terms of monetary policy? His favorite data point was the price of gold. And I remember a particular speech where gold was around 400 or somewhere 300 and something. And Greenspan said, look, if the price of gold is getting closer to 400, then I know that I'm too loose. But if it's going down to 300 or below, then I'm too tight, right? So he said that the gold price was the best indicator he knew for monetary policy. And how do you know if you're too tight or too easy? So he said, we're not on a gold standard, but I use gold. And so because we use gold, he said, this is just as good as a gold standard because I've got gold as a data point, to let me know. I can look at the price of gold and I know whether policy is too tight or too loose. Well, based on that, based on what Alan Greenspan said was the best data point to look at, What is a record high gold price telling Powell, or what should it be telling Jerome Powell right now? Policy is too loose. Interest rates are too low because the price of gold just hit a new all-time record high. So what Powell should be doing based on $2,500 gold that isn't going to stop going up, it's going to keep on rising. This should be telling Powell, we need to hike rates. But Powell is ignoring uh, this warning sign, and he's going to cut rates anyway. And gold is going up. So gold knows, gold investors, the smart ones, know that policy is too easy and that the rate cut that's coming is a mistake.